about 4 or 5 years ago, the CBN imposed a ban on, the P2P trading. Banks were required to close accounts, any account, involved in this crypto trading.
You're welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition will discuss understanding Nigeria's capital markets in a world of changing digital context. This will encapsulate the recently published Proshare 2025 Online Trading Report. My guests for this conversation are Mr. Terver Audu, a macroeconomist with Proshare. Nice to have you.
Thank you for having me.
And Phebe Agbai. She's also an economist with Proshare.
Thank you for having me.
Thank you very much. And once again, kudos to the research team for this very incisive report. Let me first begin with you, Phebe. When we look at the report, what were the global trends and trading metrics that has shaped online trading today from this report?
This year's report actually covers the Nigeria's capital markets in a world of changing digital context. And it took us a step further from last year's report. And last year's report, focused on DLTs, blockchains, the technology on which these digital assets were built. And then this year, we looked into how these digital assets have evolved, is evolving, and has infused into the global capital market. So for the trends, we've seen that digital markets have evolved a lot, and then we've seen increased adoption and awareness of these digital assets by individuals, by institutions and public sector, of which countries are now looking into possibilities of using currencies, reserves currencies backed by the crypto. And then we also observe that because of this evolvement in digital assets, we've also seen an increase in regulatory landscape growth, yes. And we have seen divergence in various countries across the world. And then we also, from our report, we also saw trends like increased institutions adopting or buying into Bitcoins as a measure of asset or investors' assets. So their appetite have increased for that. And we looked at top 10 countries around the globe, of which US and UK and France were part, and the sectors or the industries that covered or that captured some of this increase in their appetite are the technology and financial services. Actually, we also looked at the strong relation between crypto assets, the capital market, and macroeconomics dynamics.
Very interesting. And that's why we've seen the economies you listed, leading economies in their adoption, US, UK, and France. Interesting to see that US has a president that even promotes that. But for you, Terver, let's look at the state of play in Nigeria's digital trading ecosystem over the last year, as highlighted by this report.
The evolution which Phoebe has spoken about, it's not necessarily just driven by technology in itself. It's also driven by a range of other factors which are reshaping the online trading landscape. The macroeconomic shifts she mentioned, the changes in regulatory reforms, as well as broader geopolitical dynamics have contributed to shape the online trading landscape. But to your question, the key issues. First, for us in Nigeria, we must recognize that digital assets come with so much potential. And with this potential, there is that possibility, or the potential we see today has so much in it to shape the future architecture of our capital markets. The digital asset space, it's also very essential in determining how capital begin to flow, reallocation of capital. It's a space which is determining what kind of assets are traded, portfolio compositions, management, how risks are being managed. In fact, this space is a space that is going to determine who participates in the market, the future of the capital market. So it's solely dependent, or is going to be very much dependent on the digital evolutions from digital asset landscape. Secondly, we realize that the pace at which these assets are evolving, it seems to be, way ahead at which the pace of regulations are being moving. So regulations seem to be playing a catch-up. Now, this is not necessarily indicating a failure in itself. We believe from our report that it's a possibility, it offers opportunities to learn, opportunities for more engagement. The market is still learning. There's still more we need to know. We have to know and we can know from these evolutions currently ongoing. Thirdly, we raised a lot around the issues of awareness. So many people are aware about what crypto is. We see the rankings, Nigeria globally, second largest adopter of crypto. But if we were to take a poll, how many people are aware of crypto? Or, that something called Bitcoin. So many people will say they know about this asset. But how many people really understand how it works or how to manage the associated risk in investing in these assets? So when you talk about issues around the literacy level in digital asset landscape is as low as that which we've seen for the traditional market, which is somewhere below 30%, 40%, well below the 50% we have in the Nigeria Capital Market Literacy Master Plan. We went a step further to look at issues around the risk also involved, because Proshare flagged the need for more investment in infrastructure to manage risks, because as more digital transactions take place, there's that possibility of more cyber attacks. So the cyber risks are there. So the investments in these infrastructures to be critical. So overall, the key issues go beyond just the technology from these assets to the infrastructure, the security, the awareness, the need for more literacy, to how much we can tap the potentials from this landscape.
Very interesting insights, Terver, especially the need for the literacy, which even said traditional markets are not even at the level they're supposed to be. So, and I know that the current Director General of the Securities Exchange Commission, in the recent or several months ago when we had the fireside chat, Proshare fireside chat with him, identified the fact that with the ISA, there's a lot to be done with awareness, and we will really come to that. But let's look at the key findings from the report survey, the research findings from the report survey. I must admit that this report is so interesting. When you read through it, the graphics, it's just user-friendly. So let me begin with you, Phoebe, the key findings.
Well, we'll talk on creating awareness and knowledge, just as mentioned. The Proshare, the survey revealed that we have more investors in the market than traders. So 4 out of 5 participants, in the market tilts towards long-term investment. So they are long-term investors, they are conservative. And from our findings, we also noticed that the goal of investing, or the goal of these investors, is so that they can have capital yields, so that they can increase their capital. And about 2% of the survey findings we did, about 2% are looking into short-term investment only. And then for the capital yields, about 60%, that means it's taking like major part of the entire reason as to why people are investing. And also, we also found out that the equities market is accounting for about 90% of the capital market security. That is, the equity is now like a major holder in the capital market. And then we also see 9 out of 10 persons are trading equities, and then 1 out of 10 are trading digital assets. And it shows that there is a large gap to cover when it comes to digital asset trading and then the capital market. From the survey, we also found that we created, not in any order, not in a particular order, but we gave out about 20 digital traditional trading platforms, and then 10 digital asset trading platforms. And then from what we also discovered, that there were some challenges that were raised from the survey. We saw challenges of, late settlement, ambiguous interface. We saw lack of investors' knowledge on the market and all that. So that is one of the things we found out on the finding.
So Terver, from the regulatory part, what are one or two things that could take out from the report findings?
She's basically mentioned most of the findings, but from the aspect of regulation, it was a very interesting aspect because Nigeria has made notable progress in terms of regulation. It's still a budding area for us because the digital asset landscape is still evolving, very much evolving, and we're getting to learn more. But then flashback to the last 4 or 5 years, what we've seen is a high level of P2P. A lot of the youths, urban youths especially, enthusiastic when it comes to issues around P2P. But about 4 or 5 years ago, the CBN imposed a ban on the P2P trading. Banks were required to close accounts, any account involved in this crypto trading, majorly not because they wanted to do so, but because to try to curb currency risk and around issues of money laundering. Now, after that, the SEC had rolled out some digital assets guidelines, especially targeting the virtual asset service providers. And some time back, the CBN had also complemented what the SEC had done with its other virtual asset service provider guidelines. Most recently, we've seen the ISA giving very good recognition to digital assets, crypto in specific. And before that, there was the NGX Invest platform, which the NGX rolled out. All of this is done with the aim of the online trading market and how it integrates or relates to our traditional market. But our survey finds that very significant, about 47% of market participants actually say they do not, or they are not aware of these regulations, or they do not understand much about these regulations and how it operates. And the level of perception too, it was found to be low. At least close to 50% of respondents have a very weak perception about regulations. So this poses regulatory risk because when you're having a low level of awareness about regulations and the perception is low, then where's the place of compliance? Because level of compliance will therefore be very much low. So this in itself, poses an opportunity for more engagement, like we've said earlier, for more education and other gaps. Perhaps even in area of research, we would need to do more. Why we have that low level of awareness and what could be done better.
No, I agree with you, Terver, because we're now looking at the phase of the next phase of the Capital Market Master Plan. And the Director General of the Securities Exchange Commission talked about improving engagement and awareness. So there has to be a whole of market approach with the regulator taking the front burner and then input from stakeholders, especially like you said, around digital assets and integration into the market. Well, Terver, in 1 minute, do you want to add something additionally in terms of challenges on risk and adoption from the regulatory parts?
Basically, the regulations are there to protect market participants. Yeah. And so far, regulations have been divergent. Like she said at the beginning of this interview, that regulations are highly divergent across countries because different countries are actually taking different approach to how they manage these assets. Some countries are embracing it. Some are being a little bit more cautious or skeptical about how they approach these assets. So that is because they want to protect investors. So some of the risks, though, we've seen is issues around the pace of regulation. The pace of regulation should be such that we don't miss out on certain opportunities that could be in this market where there's so much potential for us. Aside from regulation, the environmental implication of these assets are there. The energy, because when you're mining some of these assets, you're burning a lot of CO2, there's a lot of CO2 emissions, and that's actually a lot of, it poses energy concerns. Areas around the cyber risk, we've mentioned it earlier, They are very important. The infrastructure, security, awareness is very important. But lastly, I would like to mention issues around the macroeconomic risk. The macroeconomic risk part of it is so essential because these assets like Bitcoin, what exactly are they backed by? Our regular fiat currencies, we know, are backed by something, and assets are created backed by something. Bitcoin is not necessarily backed by anything. Other altcoins like the Ethereum, they're not backed so much by anything. Now, stable coins may be backed by something. For instance, the US, the stable coins are backed by treasuries and all of that. But that in itself is risk because it may not necessarily be so stable. It may alter the yields, give you an arbitrary, picture of what yields are in the market. And that transitions to what happens to monetary policy. So the distortionary implications are very much there.
Very interesting, Tebe. From what you've said, it's very clear. Even at the international level, where you have the International Organization of Securities Commissions, they need to have a common or clear approach on digital assets. And then central banks who are very conscious would have a lot of work to do around that. So, in concluding, Phoebe, what are the recommendations from this report and the outlook for Nigeria's digital financial market?
From what he has said, I think we also, from the report, we need to, improve on regulations. Regulations need to pace up with the changing appetite for this digital asset, and also need to extend daily hours for asset trading. Like we recommend at least 2 hours extra additional for conventional trading section, and to also change thresholds needed for the number of shares needed for a shift in market price. And we also look into improving the speed of the transaction, like for instance from T+3 to T+1, and also to reset thresholds for trading commissions. And then lastly, for the outlook, we expect an expansion if supported by structural reforms, market development, and accessible capital market entry.
Very interesting conversation. I must really say a lot to unpack, especially around the need for more awareness, the need for investment in enabling infrastructure, for the regulators to be on top of it and very clear on how they want to regulate. And of course, what Phoebe has said to the linkage between the digital assets, the capital market, and the macroeconomic dynamics. Quite interesting. And you, Terver, you've been very clear that it's time to have a very clear approach on how we want to play the digital assets and, of course, the infrastructure. So thank you very much, Terver Audu, macroeconomist, and Phebe Agbai, an economist with Proshare, for this interesting conversation on understanding Nigeria's capital markets in a world of changing digital context.
Thank you.
So viewers, that was a very interesting conversation. Of course, the 2025 Proshare Online Trading Report, which focused on Nigeria's capital markets in a world of changing digital context. To get that report, to read that report, to understand that report, visit our website displayed on the screen, and also follow our social media platforms to engage. It's a very interesting conversation. Until we come your way again, keep tabs with socio-economic developments around you. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.